Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Again, welcome to Ron Siegel Radio. This is the show with no real boundaries. As we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest, repeater on Ron Siegel Radio. Jeff Sipes is with us, Blue Water Credit. Good morning, Jeff.
Hey, Ron. Happy to be here. Thanks for having me.
Glad to have you with us. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
Well, I do have a great team when it comes to developing a financing plan, a plan to save you money. I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. Today is National Tolkien Reading Day. Okay, it's an English author. I get it. 1892 to 1973, writer, poet, philologist. I can't even say that one. University professor, best known as the author of the classic works The Hobbit, Lord of the Rings. You know, this is way, I don't know. It's above my pay grade. You know, I just.
You know better than that.
Can we go back to something that I can really get into? Can we sink my teeth into? Of course we can, because today is National Lobster Newburg Day. I don't even know where you go get lobster Newburg here in Orange County. You got to go to, I guess in Vegas, you can probably go to every hotel probably has in their dining rooms. They've got lobster Newburg. But I like the one, you know, you look at it right there in the picture in a nice sourdough bread bowl. Drooling over here, so I guess we better get moving along. And we've got the biggie here today, huh, Josh? We're gonna. I'm sure that I've got a drum roll on my board here somewhere, but I got this new board and I can't figure out where to find anything. There, I think I found it. National Medal of Honor Day. Okay, and we celebrate those people that have earned a Medal of Honor. So that's another one that we like. We like celebrating and honoring people. So March 25th recognizes all Medal of Honor recipients, the highest military award for valor in the United States, created in 1861. So, you know, if it's got to do with our honoring our military, okay, that's one. And you know, as the number one lending team in America for Homes for Heroes, we honor our military men and women at all times. So thank you for your service, all the men and women of the military. Let's see what's going on in the world today. Okay, why is it that I got an advertisement instead of telling me what the markets are doing? Dow Jones Industrial Average down 48. The S&P is up 1. NASDAQ is up 43. Oil's down 13 cents a barrel. And I don't remember. I don't think I've got it on this board. I've got to get this back, Josh. I need the our music for Jeopardy. I know we had it, but got to get that back. Okay, so anybody know March 25th? It is a day in history. And if you're old like me, you'll probably remember it. Some people may not. but today was the peak of the dot-com era. So right after this is when the dot-com bubble burst and stocks took a big time tumble. So March 25th, that is the peak. Speaking of peaks, do we even want to look at this one? But I guess we should, just because we are in the state of confusion. Okay, so we have gas prices. $3.14 a gallon is the national average. $4.65 a gallon is the average for Canada. $4.65. $1.50 more than the national average. And I'll even throw this out there. We're even higher than the oil producing state of Hawaii. Oh yeah, they don't produce oil in Hawaii, but we're still higher than them. So continually watching our gas prices rise while everyone else watches theirs fall. Mississippi, $2.67. Florida, think of this one. So if you go to AAA.com, you'll see all the different states and the prices, and it breaks all the groupings into 10. Now, unless you're studied history under President Obama when there's 58 states, there's still 50 right now. Canada doesn't count yet. But so it breaks it down into groups of 10. Florida is in the second highest price states, second highest grouping at $3.09 a gallon. California again at $4.65. And I did pay, I think, $4.60 at Costco yesterday. Yes, it's a premium, but Josh, you what about $3.30 over there? And so Josh is in one of the highest price states in the country. And he's at $3.30 a gallon. And we're over here at $4.65. Thank you, Governor Newsom. Maybe there's some more bills that you can sign that can get us in more trouble and charge us more money. But you know something, let's get on with the broadcast. There's so much better stuff to talk about than gas prices because it makes me ill. But we're going to learn about one of the biggest topics I ever have on Ron Siegel Radio is when we talk about credit and your credit scores and the misconceptions and myths about credit. And how many people send me a note saying, Ron, this is what my credit score says. Experian told me that, and it came on my credit statement, and I run their credit, and it's nowhere close. Or they go and they get a Vantage score, and they call me and say, Ron, my credit is 875. I said, that's wonderful. Probably not a FICO score. Yes, it is. My bank told me it is. Well, we're going to learn from the guru himself today about credit scores, about banks, about credit cards, credit card debt. And we'll see if some of the things that I've been sharing with you over time are still accurate, because some of these things change. We'll also talk about the best week to list your house. It's almost here. Are you ready? And if we have time today, I'm going to tell you exactly how we determine your interest rate when you're doing a mortgage. All that and more. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, shame on you. But the replay is available. Ron Siegel 1 on YouTube, Ron Siegel numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. And every day at this time, OBMMI. They provide the most comprehensive, accurate, and timely interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number you need to put into your mortgage calculator to find out exactly what your principal and interest payment will be. Don't have a mortgage calculator? Well, you can get one for free. We give it to you. rsrlinks.com/mobile app. It's right there on our mobile app. rsrlinks.com/mobile app. Rates yesterday. Conventional 30-year fix, 6.624. That was up. Jumbo 30-year fix, 6.784. That was down. FHA 30-year fix, 6.315. That was down. VA 30-year fix, 6.137. That was up. USDA 30-year fix, 6.387. That was up. That's for our rural areas. Generally, no down payment on that USDA loan. If you want to know our thoughts about the market each and every business day morning, as early as the data allows, we do put out a report. We put out lots of reports and give them all to you for free. Although we might have a new tool coming out in the next month. We're working on it right now, but you can get our market report. It is at rsrlinks.com/market minute. rsrlinks.com/market minute. And so we put out our thoughts there each and every business day morning. What are the markets doing today? Well, let's take a look. The S&P 500 is now up 2.89. 10-year treasuries down 3 basis points. That's good news. Mortgage-backed securities, that bond is up 8 basis points. That's good news. Remember, when the bond goes up, rates go down. Why? What's driving the markets right now? Well, we got some good news on housing, which, we follow housing obviously very, very significantly here. But Case-Shiller and FHFA, they released their January appreciation reports. Case-Shiller Home Price Index is the gold standard for appreciation. Showed that home prices rose 0.6% in January on a seasonally adjusted basis. The raw figure was 0.1%, but because this is a weaker time of year for housing, it's always seasonally adjusted higher. Year over year, home prices rose to 4.1% from 4%. FHFA, Federal Housing Finance Agency, released their house price index, which measures home price appreciation on single-family homes with conforming loan limits. Different than Case-Shiller, it does not include cash buyers or jumbo loans. The FHA reported that home prices rose 0.2% in January after the seasonal adjustments. Year-over-year home prices are up 4.8%, which is stronger than the 4.7% in the previous report. Bottom line, home prices are continuing to move higher and are rising around 4% year-over-year, which is a solid home price appreciation. Remember, this is California. Ours are even a little bit more than that. New home sales, measured signed contracts on new homes, rose 1.8% to 676,000 units at an annualized pace. Was 1,000 lower than estimates. There was an upward revision of 7,000 in January. Sales are up 5.1% year over year. The median home price was reported at $414,500, down 3% from January and 1.5% year over year. This is skewed lower due to the decrease in sales caused by harsh weather in New England, where homes are more expensive. Remember, whenever we say median home price, that's strictly the mix of homes selling. Has nothing to do with the houses on your street. Go and look at FHFA for that one. Only 119,000 homes were completed, while 102,000 had not even been started, and some may not even happen. When looking at the pace of sales versus homes that are completed, the month supply declines to 1.7. Very, very tight. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990. 800-306-1990. So let's chat a little bit, maybe a lot of bit, about credit. And the guru of credit is, and I'll share with you. Now, when you talk about folks that are helping to correct credit reports, I'm just going to call a spade because I can and you expect it of me. It's not the sexiest world, and there's a lot of shysters out there. And I'm going to tell you that you got to watch what you're doing. Why do I bring that up? Because you got to go with somebody. You've got to work with somebody who's vetted, who's got a great reputation, who helps people with the right way, the right heart. And you can look, and I mean, I can tell you, leading a lending team, when I one time said that I might consider doing credit repair, the CEO of the company said, "You better not." And he doesn't tell us not what to do and what not to do. So it's been simple for me for, I don't know, 10 years, I don't know, give or take. I've sent everything. I've referred every person that I know that asks about this to Jeff Sipes and the team at Blue Water Credit. Good morning, Jeff.
Hey, Ron, excited to be here. Yeah.
So, I don't want to go too deep into it, but am I missing something with the thought of people really needing to be careful of what they're doing in this space?
Yeah, unfortunately, Ron, there's over 40,000 credit repair companies in the U.S. And for us California residents, there's only about 100 that are actually licensed to do business here in our state. So odds are you're working with someone, if you just have a friend that's doing credit repair, or if you're finding somebody online, unfortunately, you want to make sure they're registered. And if it sounds too good to be true, it probably is, right? Just like that old adage.
Yeah, one of the things that and maybe it's not the case anymore, but it used to be that you'd hear some of these companies say, "Well, I guarantee that we can get this cleaned for you." And I say that in my world, the only thing that's guaranteed in investments is treasuries. Can somebody really guarantee that they're going to be able to clean up someone's report?
Unfortunately, we can't, Ron, because we're dealing with a third party. Now, one thing that we have added in our recent years is we do have a team of attorneys. We have 3 law firms that we're sending clients to. If creditors aren't fixing violations or mistakes, and just last year, Ron, our clients received over $300,000 in cash compensation for creditor violations.
Explain that a little bit to me. $300,000 in cash comp. What's that about?
Yeah, so we're looking over the credit report. We're looking for issues, identity theft, incorrect balances reporting, duplicate accounts that shouldn't be on there. If clients have 4 or more charge-offs, odds are one of those charge-offs is misreporting. Or if collection agencies aren't adding dispute verbiage after a debt validation was sent.
And so you do all this stuff based on what the law says. And if the creditors don't adhere to the law, then that's when you're able to then just forward the file over to an attorney. Is that how that works?
Yep, it is. Yeah, we send them to our attorneys. The attorneys don't charge anything out of pocket, but they do keep 30 to 40% of the settlement. We just had a client last month that they received over $35,000 in cash settlement. That was her portion, just because creditors wouldn't fix the errors on her report.
It almost sounds punitive, doesn't it?
Yeah, it was. Yeah. So
one of the things that I see a lot is, we're when we look at stats, we know people have been living off of credit cards since the COVID money stopped flowing in, and the credit card balances are going up. How does that affect someone's credit?
Yeah. So FICO, like you said earlier, is the credit score most lenders are using. FICO states one maxed out credit card can impact the score by 40 points. And if you have multiple maxed out cards, your score can drop over 100 points. So unfortunately, having maxed out cards makes you more at risk for having defaulted payments or having collections. So maxed out cards significantly drops your score.
So how do we correct that? I mean, I'm not spending money, but is there a strategy there that we should be working?
Yeah, for sure. So debt snowball is something that we've kind of adopted. You list your debt smallest to largest. You want to make your minimum payments on everything. And then your smallest accounts, you want to pay off with any extra money. That's also going to raise your credit score the fastest. The other option is the debt avalanche. Debt avalanche is where you're listing all of your credit cards, and you're going to list them by order of finance. So whichever has the highest interest rates, you're going to attack first. That way you'll actually pay the cards off faster, but psychologically and from your credit score standpoint, the debt snowball is a better option for you.
So if you've got it kind of depends on what you're trying to accomplish.
Yep.
Right, getting out of debt, the debt avalanche is probably going to help you because you're getting rid of the higher interest rate, and that logically sounds like what people want to do. But the debt snowball, if you're trying to buy a house, that might be your better option, just because that's going to get you help your utilizations quicker.
Yep, exactly. Your debt to income ratio will be better, as well as it'll improve your credit score faster, because FICO looks at each card individually. They look at your limit versus the balance. They call that your utilization. So if you're able to pay off 3 or 4 smaller cards first, your overall credit score is going to be benefited from that. And then your largest accounts will pay off last.
Would it benefit me to get an extra small card or two just to help that with that?
I mean, so that's kind of a loaded question. So if you have a good credit score, you apply for a credit card, you're going to have a credit inquiry. So it will hurt you a little bit there, probably 1 to 5 points. The new account, a new credit card, if you have old accounts, your score won't be hurt that bad. But if you have relatively all your accounts are new and you open up another new account, probably going to have more of an impact on your score. So, but if your goal is to get out of debt and you have a good credit score, I would look at getting like a 0% interest for 12 months. Then if you have money to pay that off, it'll help you get out, because the average credit card interest rate right now is probably around 23 to 25%. So your interest charges are crazy right now on those cards.
Yeah, it is crazy. I know I've been telling everyone 22.84, so I'm right in line with what you're seeing as well. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, the best week to list your house is almost here. Are you ready? And how do we determine your mortgage rate, the interest rate we're going to quote you? All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Fun.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's...
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The best week of the year is almost here to sell your house. Are you ready? Real-time real estate segment, again, brought to you by rsrmoney.com, rsrmoney.com. If selling your house is on your to-do list this year, the time to start prepping is now, because experts say the best week to list your house is coming up fast. A recent Realtor.com study analyzed years of housing market trends, excluding 2020 since it was an outlier, and found that April 13 to 19 is expected to be the ideal window to put your house on the market this year. Quote, we've identified April 13 to 19 as the best week to list for sellers. A seller listing a well-priced, move-in ready home is likely to find success because spring is generally the high season, the real estate for real estate activity, and buyers are more plentiful earlier rather than later in the year. Listing earlier in the spring raises a seller's odds of a successful sale, unquote. What makes this week stand out? As the quote mentions, spring is almost always a strong season for sellers, but this particular week could give you an even bigger advantage this year. Realtor.com goes on to say what listing during this sweet spot could mean for you. More buyers looking at your home since demand is high this time of year. A faster sale since serious buyers are eager to move before summer. A better chance of selling for top dollar. According to the study, you can get an average of $4,800 more this week and $27,000 more than you would earlier in the year. If you want your house on the market for that window, act now. With just a few weeks left before this prime listing window, you'll need to make a plan to work smart and act fast. That's where working with a great real estate agent comes in. They can help you figure out exactly what you need to do to get your house ready, prioritize the tasks that'll make the biggest impact in the shortest time, decide if there are any quick fixes or small upgrades that could help you attract buyers. Assuming your house is already in good shape, your focus should be on quick, high-impact updates, as Investopedia explains. Quote, you don't have time for any major renovations, so focus on quick repairs to address things that could deter potential buyers, unquote. Here are a few examples of small projects that can make a big difference according to Redfin. Fix what stands out, address issues like leaky faucets, chipped paint, or squeaky doors. Boost curb appeal. Focus on things like a well-maintained lawn, trimmed hedges, and fresh mulch. Brighten and refresh, upgrade lighting, repair walls in neutral tones, or repaint walls in neutral tones, and bring in more natural light, and limit the amount of stuff in your space and remove personal items. What if you're not ready just yet? Don't worry. It's okay if you don't think you'll be ready for this week. Just because April 13 to 19 is projected to be the best week by Realtor.com, that doesn't mean it's the only good time to sell. Even if you need a bit more time to get your home ready, there's still plenty of opportunity this home buying season. Bottom line, if you've been waiting for the right time to sell, this could be it. Timing isn't the only thing that matters. How well you prep and price your home is just as important. Want to find out how to sell your price for the most money possible? rsrlinks.com/salesmax. rsrlinks.com/salesmax. Give me a call. We'll build a plan for you. And yes, I will put you in touch with a great real estate agent anywhere in the sound of my voice. That's the Real-Time Real Estate segment brought to you by rsrmoney.com, rsrmoney.com. Continuing our conversation, Jeff Sipes is with us, Blue Water Credit. He is the credit guru and somebody who the listeners of Ron Siegel Radio have been talking to for many, many years, Jeff and his team. And, you know, we get rave reviews and it's comforting to us. You know, we have to vet people and make sure that if we're going to refer somebody from the show, that we know that they're going to have the consumer's best interest at heart. And we can safely say that when we send people over to Blue Water Credit. So thank you for helping the Ron Siegel Radio family, Jeff.
Oh man, it's a privilege. You know, my wife and I started Blue Water Credit in 2008 with a vision. Our goal was to love and value people by offering solutions to giving hope and guidance to people struggling with bad credit. I was our first client when I was 21. I dropped out of college to start a business. I destroyed my credit, so I know firsthand what bad credit feels like. And my credit's better now, Ron, so that's good news.
So let me ask you something, because I'm going to use me as an example, Jeff. So I use a service called myfico.com, and I'm monitoring my credit all the time. I'm probably a loony because, you know, it gives me an update every time something changes on my report or my wife's report. Am I overdoing it, or is that something you recommend?
No, myfico.com is the only website where you're able to see your FICO scores for car loans, for home loans, for credit cards. So it is the best website to get accurate scores. And honestly, these days, Ron, you really want to be watching your credit because identity theft's on a rise. You know, creditors are making mistakes like crazy. So no, I think it's a great place to get your information.
Are you seeing any movement up or down on the accuracy of credit reports? Are they still just as bogus as they used to be? My words.
Yeah, the last study I saw was probably 8 years ago. They said 79% of credit reports had a mistake. So it could be a name, an address, a phone number could be wrong, or it could be as serious as you're marked as dead. We've had a few clients come to us and they're like, I don't have a credit score because I'm marked as deceased. I'm like, that's kind of a big mistake. So we help them work through that.
I wonder what the attorneys could get if they won't replace it, correct that one.
Exactly. That's got to be a big settlement, Ron.
Yeah, I would think that's kind of a nutty thing. So, Jeff, I've talked to people, and we've run a video for the last few years, and I talk about paying your credit card bill before the statement due date. Is that still something that works? Is that still a benefit to people?
It is, Ron. Yeah, especially if you pay your cards off in full every month. There's 2 dates to remember: your statement end date and then the payment due date, right? When your statement closes and when your payment's due. So the credit cards send the information to the credit bureau when your statement closes or statement ends. So if your balances are low, say below 10%, you're going to have the best credit score possible. So if you max out your cards and you pay it in full every month, your credit score is still going to be low. So you're giving great advice on that.
Okay, so we're head on there. And what are there new changes coming this year? Have we seen any new changes? I know what we were talking. I'd heard at one time they were dealing with something with medical debt. And where are those changes? What do those look like?
Yeah. So as of now, medical debt's not supposed to be showing up on your credit report. So if you see any type of medical debt, paid or unpaid, give us a call. That's something we can work through. Next changes, Ron, they keep pushing it out, but they're talking about changing the credit score used in the mortgage industry. So the versions in the mortgage industry are probably about 25 years old. They're trying to update them. So we'll have to hold our breath and see if that happens, Ron.
So when you say they're 25 years old, and we say that the credit score shouldn't show, does that reflect even though the version is 25 years old?
How do you mean? What do you mean by it doesn't show?
So you said that the medical debt is not supposed to show up.
Oh, yep. So that's on credit reports. Yeah.
Okay.
So the FICO scoring models in the mortgage industry were created, in the early 90s, and so their FHFA said that they're trying to revamp it to where they're going to use a Vantage 4.0 and the FICO 10T. The 10T means trended data. Trended data is looking a 2-year look back on your credit card balances. So paying off your credit card, say I have a bunch of maxed out cards and then I pay them off. Well, the next month when that updates, my credit score can go up up to 100 points right now. Well, if they go to the FICO 10T, they're going to look at a 2-year average on your credit cards. Ooh. So somebody that has a lot of debt carries a lot of debt can't just pay their credit cards off and their score is going to go up on this new version. So I'm not a big fan of the new version, but I understand they're trying to look at longer trends, like a 2-year trend on credit cards versus just 1 month.
So explain the difference between, you said FICO and the Vantage. Talk to us about that a little bit.
Yeah, so Vantage score was created by the credit bureaus to compete with FICO about 15 years ago. So Experian, Equifax, and TransUnion, they saw FICO had a monopoly. So they're like, let's just come up with our own credit score. Unfortunately, it was never really adopted. So Credit Karma is probably the biggest pusher for the Vantage score. If you're getting free credit scores, most of the time they're going to be Vantage scores, Ron. So I personally have seen the Credit Karma score be 10 points off. I've seen it be 100 points off. So it's just really not a good gauge on your mortgage FICO score.
So, to me, as a consumer advocate, I look at it and say, why would I even want to I don't trust the bureaus anyway, right? Because we all know that they make more money if the scores are lower. They sell trigger leads, which drives everybody nuts. And now we want to trust them with a Vantage score to be the arbitrator there. It seems to me that whole Vantage idea, I'm kind of glad that they've never gone to it. Am I missing something?
No, I agree with you, Ron. Yeah.
Okay.
It's kind of like the Visa and MasterCard settlement. I was watching the arraignment and they asked what the average profit was for Visa. And they're making about 50% of their income is profit. So when you only have 1 or 2 people in the market, 1 or 2 companies, the consumer is definitely at the disadvantage.
So we need to get a lot more of the competition in the market.
Yes, sir. 100%. Yep.
Great information. We're going to continue our conversation with Jeff Sipes when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Where in the world, how do we determine someone's rate on a mortgage? We're going to talk about that when we come back. You reach me anytime off air. Number 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Borrow Smart segment today being brought to you by rsrhomeselect.com, rsrhomeselect.com. Where do mortgage rates, how do we determine a mortgage rate when you're looking at buying a home or refinancing a home? What do you know about them? Well, the first thing you need to know is mortgages, the interest rates change all day long. I have a couple of screens that I keep on my that I pay for subscriptions to monitor where the rates are and what they're doing, what's going on, what are the bond rates doing, what are the treasury yields doing. And if you want to compare loan rates, you have to do them in a very, very short window, maybe within 10, 15 minutes of each other. If you're going to call Wells Fargo or Chase or our team or whomever you're calling, you got to do it within a very, very short window of time because they're always changing. So what I've done is just to kind of demonstrate, we actually went online just recently and I Googled, what is the 30-year fixed rate mortgage today? And if you're watching us on ronsiegelradio.tv, any of our socials, or the ABC News and Talk AM 1490 or FM 98.1 video feed, you're seeing what the results were. It came up that at that moment, U.S. Bank was at 6.49, Bank of America was at 6.625, and Wells Fargo was at 6.5. Three different institutions, three different rates. That's the way it's always going to be. You're not going to ever know what you're getting. Then you look at it and say, okay, well, Ron, I've been watching the rates and they've been going up and they've been going down. So we put together a chart, and this comes from our friends over at OBMMI. And that chart is detailing what have rates done this year? What are the 30-year fixed rate loans this year? And you can see that they've been anywhere from, just under 7.1 to most recently, they were at about 6.72, 6.73. So you can see they go up, they go down all the time. They're always changing. Now, so how do we determine your rate? Well, there's a screen that we have. And if you look at this screen, again, if you're watching us on any of our socials, you're seeing there's probably 25 different fields that we have to fill in order to determine, just to get started on your rate. And we want to know, is it a purpose of the loan? Is it a refinance? Is it a purchase money? What are we doing? Is it rate and term? Is it cash out? What's the loan amount? What's the value of the property? Is it a first position or is it a second position? What type of loan are we doing? Where's the loan located? Is it a single family property? Is it a condo? What kind of, is it a rural? What is it? Occupancy. You have primary, you have second home or non-owner occupied. Primary is the cheapest. Second home is generally next, and investment is the highest. Why? because that's where the risk lies. Just like we're talking to Jeff Sipes about risk from credit reports. Well, that goes in here also. We also look, is there co-borrowers? What is that FICO score? That goes into it. Self-employed, debt to income ratio, reserves, it's all part of it. And then you get to the big screen. And this is the screen that lets us say, hey, what rate do you want? And this doesn't even go into the idea of what we talked about yesterday, where you can lower your interest rate by 1.5 points or any amount you want to right now without doing anything. But you can see on this chart that you have the option at this particular given moment of 7.375 to 4.75. Anything that you want, you can choose. And you can see what the payment changes are for the particular loan. And you can see that the difference between a 6.75 at $338.91 and 6.5, $37.92, less than $100 a month. Okay, so people are worried about these things, but why do you choose them? It's because of your unique situation. If you look in the last column, you can see anywhere from getting money back, which allows us to help you with costs, all the way to paying to buy down the rate, to maybe you're going to buy down the rate to 4.75. That was available in just recently when we did this chart. So you have all of those options. It's not a gimmick. It's just a matter of how we do it. If your loan officer is not explaining all these things to you for your unique situation, well, they should be. Give us a call. We'll help you with it. 800-306-1990. That's the Borrow Smart segment brought to you by GetHomeSelect.com, GetHomeSelect.com. Continue our conversation. Jeff Sipes, Blue Water Credit. We are chatting about probably one of the top 3 items, maybe 4 items that goes into determining what your rate is going to be. That's your FICO score. So you're going to look at, what are you doing? Are you buying or are you refinancing? That's going to be one of the top items. What's your debt to income ratio? What's your loan to value? And what's your FICO score? FICO's right there. It is a major, major component. And, Jeff made this comment earlier, and I've said this before. So several years back, there was I think it was a 60 Minutes piece, and they said 20% of the FICO scores are wrong. And all the way back then, I said, okay, first family I helped with get a loan was 1983. I can tell you, I've been looking at credit reports for a long, long time. I've never seen one that's completely accurate. Never. Jeff, have you seen one that's completely accurate?
It's tough, Ron. If you go through, especially if you go to annualcreditreport.com, that's going to give you the most comprehensive credit reports. If you go through that with a fine-tooth comb, you can find a mistake on there for sure.
And and I'm saying I'm doing it as, I wouldn't say I'm a novice. I'm probably a mid B, say a B grade, okay, on a scale of 8.5. I can find them. Jeff's at an A grade. He's going to find the things that I don't even know about because I don't know the MOP and all these different codes and things that are on there. The average person doesn't even know to look for them.
Yeah.
Right?
And the big challenge we've seen lately, Ron, is everybody's on TikTok or watching reels on how to fix their credit. And I saw one just this last week where they were talking about Elon Musk violated some law. And because of that, your student loan could be forgiven. And it's completely misleading. So they're scamming these consumers, thinking they can get their school loans forgiven, paying some guy $500, and they're just pulling these theories out of thin air.
Yeah, I saw one of the TikToks recently. Someone shared it with me, and it said, "I got this report on how to avoid all scams, and I'll send it to you for $10." And basically, it was, you just got scammed. Don't send money to people that you don't know.
Exactly, Ron.
Right?
Yeah.
So I'm going to put you on the spot, Jeff, because I like some of these things. And you've been doing this since 2008, I think.
Yep, 2008. Yeah.
Give me one of your most interesting stories that you've come across in all these years of doing helping people solve this problem.
Well, we talked earlier about someone being reported as deceased.
Yeah.
One of the common ones actually is if brothers and sisters have similar names. Then their files are merged. I had a guy I talked to, he lived up in Lake Tahoe, and he's like, I'm for sure a victim of identity theft. And I'm like, well, let me see your credit. So he sends me his credit report, and he's like, that credit card, and that car loan are not mine. They were taken out as fraud. And I looked at these accounts, and they're all being paid on time. There was no late payments. They did have balances, but I was like, I don't think you've been a victim of identity theft. Someone's not going to steal your credit, Ron, and then start making payments on time, right? So what we found out was someone out there had his exact same name and same date of birth, Ron. The same name and the same date of birth. And so this guy lived in Texas, and because he had the same name and date of birth, his accounts were reporting on this other gentleman's credit report. So that was pretty rare, have the same name and same date of birth as someone else.
Yeah, that one is, I haven't heard that one. I've seen where, you know, you get John Smith and John Smith Jr.
Yep.
Right. So and those are easy to get merged. And I've got a friend who's, you know, I'm not going to use his name, but John Smith and John Smith, and they didn't identify it as one as being senior, one as being junior. They live in the same city. So it would be logical to have the credit reports, merged.
Yep.
How do you solve that?
Yep. How do you solve it? You just have to prove the identity. So we get a copy of the Social Security card. We get a copy of driver's license. We get a copy of some utility bill or bank statement. And then we send it off to the bureaus. We send it certified. And then within 35 to 45 days, if it's not fixed, we tee it up for our attorneys. Our attorneys will sue. And on a case like that, if there's just one account, we'll typically get around a $3,000 to $5,000 settlement from each credit bureau and the creditor. So 4 checks in the amount of around $3,000 each.
And, you know, it used to be that, you know, you could work on the files for 6 or 12 months. It seems to me from some of the things I've heard recently from your team, that, you know, you've got 6 months to work on a file. So you have to pretty much get them to the attorneys quicker, don't you?
So with the attorneys, we usually we'll refer them within 45 days.
Oh, wow. That's pretty quick.
Yeah. So we'll meet with the client. We'll gather all the documents. We'll send everything out certified. 45 days later, we'll repull credit on a soft pull. If it's not fixed, then we tee it up and send it to the attorneys.
So people can really get their stuff done in a quick manner right now.
Yeah. Now the lawsuits aren't necessarily quick, Ron. Those usually settle within 3 to 9 months. Most of our cases are selling around 6 months.
Okay, so we still have to wait. We still have to figure that it's gonna be some time.
Yep. Unfortunately, it's a little bit of time, but we're always happy to do a consultation. We're always happy to give advice. So that's what we're here for.
And that's what. Now, do you pull the credit reports yourself, or do they have to send you a credit report?
We can do a soft pull, and if somebody has a lender report, like something that you pulled and they're able to share it with us, that's even better.
Okay, so we have those, and we also have, obviously, we have a service that we subscribe to. You can go to rsrlinks.com/FICO and get a report and send that right off to Jeff and his team. What's the best way to reach you guys, Jeff?
BlueWaterCredit.com, or they can call our office 916-315-9190, or they could email me personally, Jeff@BlueWaterCredit.com.
And Jeff and his team are very, very responsive. So if you want to get your credit worked on, it's not one of these fake things, and it's not mine. If it's your credit, you know, that's not what they do, but they do follow the laws. And there's 3 or 4 laws that are out there that they understand the laws very, very well. They're not lawyers. They do have lawyers that they work with, but they're not lawyers. They're not giving you legal advice, but they're saying, hey, these are the things that we can do. Hire them to do it right. I'm just showing if you want to get it done, hire them, do it right. Great. As we talked with the attorney yesterday, you know, when you pay somebody to do a good job, it doesn't cost you anything in the long run, because you're going to get the job done right and get it done right the first time, and probably quicker than any other way. And again, I highly, highly endorse Jeff Sipes and the team over there at Blue Water Credit. And as always, thanks, Jeff. I appreciate you coming in.
Yep. Thank you, Ron.
As always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean, who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime. 800-306-1990. 800-306-1990 or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.